So I just bought this PropFirm account right now. So the first thing that I'm going to do obviously is to create a PropFirm trading plan. So I thought to myself, why not come here and create this trading plan in front of you, and then we come up with something that can help also you. So if that sounds interesting, make sure you watch this video until the end. So let's go ahead and create the ultimate prop trading plan. So this plan is going to be very helpful. So whenever you are creating a trading plan for a PropFirm account, you always want to know the risks and keep them in mind. So first of all, let's look at the account overview itself. So this account, you've got $10,000, and then there is a profit target that I need to meet, which is 8% of the account, and also there is a maximum drawdown, which means I cannot lose more than that amount, and in this case it's $1,000, which is 10%, right? So with these three things in mind, I know that I don't have many chances here, because if you think about it, this is just like doubling a $1,000 account, because I have a $1,000 limit. I cannot lose more than $1,000 when I'm trying to make this $800. So it's just like flipping a $1,000. So you need to make huge profits. So when that happens, obviously you are going to use big risks. So in this case, I'm going to be risking $150 per trade, which is 1.5% of my account. There's also other things that we are going to do in risk management, and I'm going to explain them to you right now. So let's talk about the risk management strategy that I'm going to be using. So first of all, position sizing and stop losses are not going to be fixed to pips, which means whenever I buy or sell, I'm not going to say I risk 20 pips, I risk 50 pips. No, the stop loss is going to be different on each and every trade, and the position size is going to be different on each and every trade. And what do I mean by this? So first of all, let's look at the position sizing of this trade, right? So what is position sizing? Position sizing is simply the calculating the lot size and the stop loss, right? Which means you have to adjust the lot size based on the currency pair's volatility and the stop loss distance to maintain the risk. So what do I mean by this? First thing, I'm going to be looking at how big and how small the candles of the around the trade, and I'm going to use an indicator ATR for that. And also I'm going to make sure that each and every position size, each and every lot size that I put is going to make sure that from the position size to the stop loss, I need to be risking 150. So let me explain that with a good example. So let's say you were buying here. So you buy here, and then you put your stop loss right here. So first thing, before I place the trade, I know that I'm going to put my stop loss here. So I need to calculate the amount of pips from the buy trade to the stop loss. In this case, you just subtract these two numbers and you are going to get 0.0017, which is 17 pips, right? 17 pips from the buy to the stop loss. So now how do you calculate the lot size here? We can use online tools. These are free. You can find them on Google. You can just search position size calculator. In this case, I'm going to use a position size calculator from Baby Pips, right? So the account size, which is the account balance, is $10,000. So just put $10,000 here, and then I just typed in 15%, 1.5% as my risk, right? Risk percentage 1.5, and then the stop loss in this case it's 17 pips. Now we have this information, then we click calculate, and then you're going to see that if you want to risk 1.5% of $10,000 with 17 pips, which is going to be $150, which is exactly what you want. And then you are going to use 0.8824. So in this case, I'm just going to use 0.88 as my position size. So when you go back to our trade, we are going to be placing a 0.88 lot size trade, and we are going to put our stop loss here. And then if this happens, if the market pushes to the downside and hits our stop loss, we are going to be losing 150. Now I know that you are not here to lose. I know you are here to try to win, but in trading we are always going to have losses. That's how it is, and no one can change it. But I will show you also how to exit when the market goes to your take profit, because it is hard to exit with a profit than it is to exit with a loss, right? But before we do that, I want to talk about what is called drawdown mitigation. So we want to know how to mitigate our drawdown. So the first thing that we are going to do is, if drawdown reaches 5%, we are going to reduce the risk per trade to 1% so that we can mitigate further losses. So if losses keep coming, they will be smaller, and the account is going to give us more chances. So first, we are going to be risking 1.5%, but if we lose 3 trades in a row and then the drawdown goes to 5%, we are going to reduce that risk to 1%. Also, if drawdown reaches 7%, we are going to stop trading temporarily and then we reassess how the market is going. So we can stop for a week or 3-4 days, so that if the market was in a downtrend, maybe if it changes the trend, then our strategy can pick up wins again. Now, the next thing that we need to take care of is avoiding overtrading. And how do we avoid overtrading? First, we are going to limit ourselves to maximum of 2 trades per day. So let's say you place a trade and then you win. You want to get out of the market. And let's say you lose. If you want another chance, you get another 1 chance. And we do this so that I want to make sure that I follow the strategy strictly. I'm not going to place any trade that is not following exactly what the strategy says. So I want to also make sure that I follow the quality over quantity formula. So I want to make sure that I place less trades, maybe 3 trades a week or even less, but then those have to be high quality trades. Now, talking about placing the trades, let's now talk about how do we enter into the market. And this is called trade execution plan. So we want to know how are we going to be entering and exiting these trades. So these are the entry and exit criteria for our strategy. First, we are going to talk about the entry. In this case, we are going to use the entry is going to be based on the RSI momentum strategy. So if you don't know what this strategy is, I will leave a link in the description. I did a full video that I created this strategy and tested it. And then I realized that when you use the good risk to reward ratio, it was making profit. So I want to test it now in a prop firm challenge, and this is what all this video is all about, right? So this is the entry rules that we have right here. Go and watch the video after this and then you understand how the strategy works. Now, the next thing that we want to look for is the stop loss, right? So the stop loss is going to be based on the ATR indicator. How much is the ATR? So we are going to put 1.5 ATR as our stop loss, right? So I'm going to show you what I mean. So if the market, if we enter here, we are going to calculate the 1 ATR. You can use an indicator called the ATR so that you know the ATR is just going to show you the amount of pips on average on that particular time, and that's how you get out of the market. Let's talk about taking profit right now, because we don't want to keep talking about losing money, right? But so for the take profit, here is what we are going to do. First, it's not going to be based on levels or anything. It's going to be strictly 2-to-1 risk to reward ratio or more. We are not going to exit a trade if we don't get to 2-to-1 profit. So if the trade goes and even reverses back, we don't care. We only start getting out of the market if our trades hit 2-to-1 risk to reward ratio. And I'm going to show you a simple trick that we are going to use to maximize our chances. So let's say we placed our trade right here, and then the trade moved all the way to the downside up to this point right here. Now we have 1-to-1 risk to reward ratio. I'm saying we do not get out of the market at this point. We don't care if the market reverses back here, or we don't care what happens right here. We are not going to exit the market if we don't get to 2-to-1 risk to reward ratio. So here's what I mean. This is step 1. If the market gets here, we are not doing anything. And then when the market gets to step 2 here, when it gets to 2-to-1 risk to reward ratio, here is a simple trick that I use, and this just helped me to maximize some of the bigger trends that you might catch. So at this point, I want to exit 75% of that trade. So what I mean by 75% of that trade, right, is that so if you are in a trade, right, and when you are about to close the trade, you're about to close the trade, you can put another lot size and close. I'm going to do a video. I think I just realized I need to do a video about how to scale out of your trades. So I'll put it in the description. If you can't see it right now, that means I haven't created it. But in like a week, you're going to see that video where I'm going to explain in depth how to exit partially in all of those trades. If you want to see that, make sure that you click the like button and let me know in the comments. Maybe I can create the video that no one needs, but if you do need it, make sure I know in the comments below. So I'll close 75% of my trade, take the profit, and then I will let the another 25% run whatever it wants to do. Most of the time it's going to continue running to your side, and then you might even make another additional profit that is going to keep your account growing better and better and better. Now that I have all these things, the next thing that we want to look at is our trading routines. How are we going to be trading this account? Because I have other things to do and I'm not going to be sitting on this challenge all day. So here is my daily routine that I am going to use. First, I'm going to want to do my pre-market analysis, right? So as my daily routine, the first thing that I'm going to do is obviously every day before the London session opens, I'm going to be opening the charts of my favorite trading pairs, which is basically the major trading pairs, the USD, JPY, GBP USD, and also sometimes Euro USD. And I'm going to be looking in those markets on the 1 hour time frame. And then I'm going to just see how far is the market away from my zone. If the market is outside of my zone already, I'm not going to be placing the trade. I'm not going to explain the strategy in full here, but I'm just going to see if I'm about to get any entries of that day. If I do, and if I see that the market might be moving back into the zone or whatever it is, I'm going to be setting alerts. Then after that, I'm going to focus only on trading sessions that gives me high liquidity, like the London session and the New York session. So most of the time I'm going to be trading the London session, but if I don't get a trade on London session, I'm also going to look in New York session. But if I don't get a trade for the day, that's going to be it. So how do you know that this is the session that I want to be trading? So you can use an indicator which is called sessions by Lux Algo. You can find it on TradingView. I'll leave a link to TradingView in the description. So with this indicator, what you do is you just put it on your charts and it's gonna draw all the sessions that you have. So if you want to see London session, you can select London session and you are going to only see the market that it's in London session. That's all the indicator does. Now once we get that, the next thing that we do on a weekly basis is basically to track my performance, right? So the tracking performance is very, very important, right? So every week I'm going to be looking into the market, and then I'm going to be looking in my journal and see what have been happening on my account history, what have been happening, what are the mistakes that I've been making, and have I been doing exactly what this plan says I need to be doing. That's where I use this journal here. So this journal, I can use it for testing strategies, and also I can use it as a journal with my live trades. So this is where I register all my wins, all my losses, and at the end of the day I have all the data, so I know, do I need to improve on the risk side, or do I need to improve on the strategy side, or maybe my risk to reward ratio is not working very good. So if you want to get a template of this trading plan that I'm going to be creating based on all the things that I've seen here, make sure you check out the description of this video. I'll leave a link. It's going to be completely free, by the way. Just to download it, fill it out, and understand how things go. And then if you do that, you are going to likely pass your challenge, or either if you're trading on your own account, you're going to make money. Thank you for watching. Smash the like button if you didn't. Please. What happened to you and liking my videos again? You guys don't like my video anymore.